Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 1st of July, 2020. Happy July, everybody. We're halfway through 2020, and we got a long way to go, 6 more months until we start 2021. But before we start talking the new year here, let's talk about today's action. Today was a day where we'll actually start discussing our sector performance. These are our 9 sector spiders in order. So financials were among the weakest. Actually, energy, XLE, was your weakest right here. And then industrials followed up the 3rd weakest of the market today. Financials, again, down about 1%. Now, technology, it's going to be easy to look at the stocks and say the biggest names were technology today, but that's not actually correct. If we look at, well, it depends on what you call Amazon, and I guess Facebook to an extent, but the strongest sector actually was utilities in today's session. And that's names you don't hear very much. That's like Duke Energy or power plants or water treatment, those sort of things. They're utilities. And they were stealthily the strongest sector in today's session. So the market was a little bit confusing for intraday traders, mainly because the strongest was tech, and that's the Nasdaq, was up 120 points in a day where the advanced decline line stayed just about negative all day. Didn't help us at all. And the reason that happened was because most stocks were actually negative today. And that pulled down the Dow mini futures and, of course, the Russell. But let's talk about the S&P. And as the title of tonight's video talks about, strong stocks getting stronger amidst this new push into July. So the S&P remains weak, at least in terms of the Nasdaq. It's beneath this all-time high. That occurred really in February into March, right before the coronavirus shutdown hit. Nevertheless, 3100 is a critical pivot, and that's within our profile levels as discussed in the prior videos. So we did play up away from, we'll take a look at these, the volume profile. Remember the discussion last week or earlier this week with respect to the market at the lower edge or underneath the value area extreme. And we gave a target up to 3100. That has been achieved and is the magnet. So right now, we don't really have that type of forecast or confidence in a forecast short term. We get a stronger forecast when the market's above the VA extreme, that's a bear type of position, or beneath, which is a bull type of position to fade the market back to the middle. And that again is 3100. In the Nasdaq, it's a little different because that is one of the most narrow profiles I have seen. And the Nasdaq is back to that prior high, which again is so strange to talk about, but it's 10,300. That is the trade on the Nasdaq there. And Dow's coming off the target, and the Russell is coming down from the high. And see, that's a little bit different because the S&P came into the magnet or the point of control from beneath. The Russell already got the upside target and came to it from above. So there's just a little bit of discrepancy in today's session, and I wanted to lead off with that. If you had a rough trading session, the market, I think, had a rough day too. Back to the bigger picture. On the Nasdaq, that is it is a new all-time high for the Nasdaq futures. That was achieved just above 10.3. And the Dow, again, weak relatively because it is not at that 30,000, strange to say once again, peak. But the weakest of the 4 is and remains the Russell, which is our small cap index. Now, that's a big picture. Let's talk about individual stocks. Let's start back with our scan, because some stocks made new 52-week highs. Some of them are big cap names, and others we might not have heard about. But this concept that stocks that are strong tend to get stronger gives us a core type of edge, and that's a trending edge. Again, stocks that are strong, uptrending, making higher highs, higher lows, have rising moving averages, or maybe even rising trend lines. If we see rising volume, that allows us to put on bull type of trades on pullbacks. So these names keep showing up and the stock's getting stronger. And that's the point. That which makes new 52-week highs in terms of probability is actually more likely to keep making new 52-week highs. So if you choose to short that, you're doing so against the odds. It may work for a scalp trade, but the better play is to buy the pullbacks. It does work both directions. You can short highs and capture small pieces of a retracement, but these stocks are generally under the logic, that which is strong tends to get stronger. So let's see some of these names. And this is sort of by order of the percent change on today's session. But you can see eBay, Amazon, Tractor Supply, Amgen, AbbVie Labs, PayPal, Microsoft, Netflix, Activision Blizzard, and Electronic Arts. These names you've seen quite a few times in prior videos. Running down the list, Amgen might not be a strong trending stock. Compare that with Netflix, but nevertheless, it did pop to new all-time highs. Is that all-time highs or weekly highs? Let's see. That is all-time highs for Amgen shares. We can take a look at the monthly, weekly, and of course, I like to focus on the daily. And the strategy here is to buy pullbacks, retracements, bull flags into rising moving averages or into rising trend lines, as opposed to shorting. Again, you can capture an in-out spread when the market's overbought and fade it back to the moving averages. And that's a kind of a scalp type of aggressive trade. And it does work. So you can use these type of logic scans, stocks getting stronger, to fade a high. But I think it's a little better to be patient and try for call spreads or bull spreads, bull type of positions on pullbacks to rising averages. Amazon is another example. It's just much more appealing but dangerous to short sell pullbacks, retracements in an uptrending stock. Uptrending stocks as defined by those which are making higher highs and higher lows in price. Higher high, higher low, higher high, higher low, higher high, higher low. The strategy, I humbly submit, is to buy the pullbacks to the rising moving averages. That gives a defined entry, a defined, I think, target, which is the prior high, and you can actually hold that for longer to play for bigger movement. Equinix is a real estate company, or Equinix. ServiceNow, I'll just go through the list of the stocks in the S&P 500 that made new, in some cases, all-time highs, but the scan picks up on stocks making new 52-week highs. Again, the strategy is to find a way to get long into the movement. It's the supply-demand imbalance, ultimately. Again, that which is strong. Keep in mind, each time that it makes a new high, it shows up on the list. So in 2020, every time you see a new level above 62 and above 65, 67, 70, etc., this stock will be showing up on the new 52-week high list. So I know it seems a little bit confusing here, but each time it did that, it showed up on a list, and the strategy is to buy those pullbacks. Electronic Arts, entertainment company. There's PayPal, which is relentless to the upside. Strong stock getting stronger. We have SPGI. Now, some of these are not as strong, maybe a little lackluster at the highs, but you might not want to trade the stocks that just sort of made a range and broke out, as opposed to something like PayPal, which has a little bit stronger bullish current or supply-demand imbalance. And a few more. ConAgra is a consumer staple stock. AbbVie Labs, healthcare. Healthcare has a lot of understandable bullish, some of them, biotechnology with this coronavirus or the pandemic. Synopsis, again, pattern. We don't know what the stocks do. You can look at that for a better position, but the logic is to find something strong and expect it to get stronger and call it successful when it does make new highs. And the entry point from a professional management standpoint is on the pullbacks, or we might call them retracements. So those are the stocks. Oh, there's more. Tractor Supply Company is one that keeps showing up. Might not be a stock that you're too familiar with, but each of these moments, they're new highs, new all-time highs, I believe, for this particular stock. At least on a, go back to the larger frame. Yes, correct. New all-time highs for Tractor Supply Company. That's probably skirting beneath the radar because it's a stock we don't really look at, but it's still in the S&P 500. And we all know Microsoft, whether we use the Apple computers or we use the Windows computers, we're familiar with the company Microsoft for sure. And this is what is helping the market go higher, and that along with Amazon, because it's a large cap name, that and Apple as well. And whole logic, well, we're not making a new all-time high, but we'll just keep the logic going with Apple. Although not there, it's close. So this is that concept of why is the market going up with a weak AD? Why is the market going up under coronavirus? Why is the market going up under shutdown? It doesn't matter. The market is going up, and it's being dragged to the upside in large part by these large tech names, or large cap names to be precise. And finally, this is a watch list with the market capitalization. And we just see from a sort list, just putting a market cap onto a watch list of the S&P 500. So we can do it like this. So from the S&P 500, market capitalization, with the exception of Apple, all the others were up. Amazon was up 4.3%. Facebook was up 4.5%. And the others were up 1.5, or in this case for Microsoft, it's a new high, but it's up 0.5%. And there's the strength, and there's the prices, or how the indexes move is by market cap movement. And as always, be careful and safe in this bull market, holiday week. And of course, we have this drift in motion. It won't last forever, but it's lasting at the moment, especially this holiday week right here as we begin the new month of July. Take care, be safe. This is TotalTheo with the Theo Nightly Video for July 1st, 2020.